right, here we are. Crypto Mukbang. Hello, everybody. I'm here with the wonderful David. Won't say your last name for anonymity purposes, but David, DHL. And of course, I'm Kyle. How's it going, man?
Going good, going good. We're missing John today, but that's okay.
We are. What's new with you?
Just following the crypto market.
As always.
Bitcoin is down quite a bit, but it's good.
I agree. It is good. We can talk about some of that. I think it's if I survey the atmosphere on Twitter, you can kind of see this happen with like the
The
interest.
roller coaster.
Well, you can just see it, and I talked about this last time with John, but like the morale's down, and it's still down. So like you don't have all this euphoric tweeting right now.
You
It's almost
don't.
like
I mean,
it's a lot of crickets. It's like
it
where
is,
is
and
everybody?
in CT, crypto Twitter is rather dead, um, and it makes sense. It's obviously more painful when you lose money than making money, and I'd say a lot of people or most people bought when Bitcoin was like 50, 60,000. So, I get it. And it sucks.
It does. True, and I'll leave it at that statement for the folks that are in pain because they bought high. I just think we've been around a little longer to see this, and it's kind of like
So,
it's not new. You know what I mean?
yeah.
uh, so it's kind of like I put a newsletter out this morning, and I said some of you it's probably just boring, but fair enough. Others of you might be terrified.
Oh, yeah.
But so like long term, I'm not very concerned about this. Um,
Me
but I'd
neither.
love to hear your opinion about because I know you tend to be. I might tend to be more optimistic than you at times. And I still am optimistic, so there's nothing wrong with that. But I'd love to hear how low you think it will go because I didn't see it really, and we're still in the 30s, right, compared to the
You are.
64,000 high. We're still like, and I think it did dip below 30 a few weeks ago briefly. Am I
Mhm.
correct? I think it
Yeah,
did,
it
just
did.
for a few
I mean, right,
moments,
right
and
now,
then came back up again. But how low do you think it'll go before we start to go up again?
well, I mean, in my newsletter this month, I did write that I think it can go as low as 20, so 20,000.
Mm-hmm.
I've heard uh, I read articles and heard people say, as low as 10,000. And but with that said, there no one knows if it's going to go that low to 10,000.
Right.
So
Nobody
for
does.
me personally, like at 20,000, I'm going to be buying at that level rather than being neutral right now.
Right.
Um, so that's what I'm thinking. 20,000. I think 10,000 is definitely even better. That's a better gift. But am I banking on that? Not necessarily. And that really goes, that makes me think, am I being extra greedy here? Trying to time the market perfect, and no one has perfect timing, of course. But yeah, I mean, on the long term as in the monthly chart for Bitcoin, it is headed down. Clearly 60, 65K was the top, and we've been going down since. But I'm just as curious to see how low we will go. Um, but I'm thinking 20K for now.
20K. Yeah. I mean, I did also see the whole it could hit 10,000. That would be significantly low. Trying to think if we could like ratio proportion the previous 19.9 or 20,000 down to like, I think what 34 was kind of the variance of that. Like what would
Yeah,
that be like tethered to 64,000? What would the low be in if all things are equal and they never are? But it's
yeah. I
it
mean,
is
and
helpful to consider.
just to dig in a little bit deeper on why I think it's going to be 20K. It's because that was the last previous high before Bitcoin basically went through that and went all the way up to 65.
Mm-hmm.
So it's going to retrace, or now it's retracing back to 20K, which is a strong support level, technically speaking.
Hmm.
And so, if Bitcoin holds there and starts to go up, maybe we can see another bull run. But if it fails as support and it's more of a resistance, then we can see Bitcoin going lower below 20K.
Okay.
Uh, no one, I don't have a crystal ball and no one else does either. But that's the two different scenarios we will see playing out. And I mean, I like to be, prepared for either one and take advantage of them, of each one. But yeah, that's why I say 20K for now.
Hmm. 20K. Yeah, I mean, I don't think that's unreasonable. I'm kind of we could see it. But what about your time frame for recovery? I'm still holding to by December, January, it's going to be more celebrating again.
Yeah,
Um,
and I'll
and it tends to happen very quickly because I remember even when China first, or maybe it was the second one technically, this recent one, just for folks that might not be aware, part of the reason it's been depressed is because the miners are exiting China and hash rate dropped and all this sort of thing. That's at
right.
least one component among others that might be, or that is influencing Bitcoin right now. But I remember it was in August, was kind of like, I don't remember, was I think it was probably 17, August 2017. It kind of seemed like the end of the world, and that was the first or second, pardon, China ban. And then within a few months, it was, all time high.
Yeah, I mean, when that
So,
China ban happened in August 2017,
so it was, yeah,
Bitcoin dropped like
2017.
25, 30% in a single day.
Mm-hmm.
But that was actually, in retrospect, that was a good buying opportunity because Bitcoin topped come that December.
Yeah,
So if you bought the fear, quote unquote fear at that time, you would have made good money.
right.
I think to answer your question, I also think November, December, we will see higher prices, but I'm going to extend that out. I also think maybe even up to April or May 2022 and beyond. I mean, the hard thing is once the stock market crashes,
Mm-hmm.
Bitcoin's going to come, it's going to follow suit. As we saw, and historically, as we saw last year during COVID, when the stock market went down in March 2020, Bitcoin went down even further, twice as much. And so, what I'm thinking is, if that happens again, which could be anytime soon, the stock market will also bring down Bitcoin. And obviously, you don't want to be holding because you'll probably be, in the red if you bought high, that is. So it makes it very tricky in terms of timing. But I'm thinking, yeah, if it's not end of this year, maybe Q2 of next year.
So you think the recovery will come and then it will collapse, is what you're saying, with the stock market, or you're thinking the stock market will tank it first and then it'll recover after that?
I'm more in the boat of, given that they're correlated, Bitcoin and the stock market, I think the recovery will come first before the bust. That's what I'm saying.
Mm-hmm.
Uh, of course, I could be wrong, but that's just how I see it playing out personally, given my biases. Yeah.
Yeah, and I have seen that it does seem correlated, even though the narrative is, because like we remember Bitcoin was kind of like, don't touch this stuff, it's crazy, four horsemen, drugs, illicit activity. That was a few years ago, right? But now it's much more like, while it's not mass adopted by any means, it's definitely more recognized and by financial institutions and you know
Yeah.
family offices and Wall Street and whatever, and we're seeing definitely more positive influence. I mean, and then there's Kathy Wood of ARC. She's one of the bigger ones, or Michael Saylor, right? So it's definitely changed, but even some of the narrative that was being developed and probably still exists would say get yourself a portion of Bitcoin, allocate a percentage of your portfolio to it. I know this is all the boring stuff, but we're talking about it anyway. Allocate a certain part because it's a contrarian to the stock market. It's like seeing that the stock market's going to do what it does, you're kind of like hedging with Bitcoin. But if they're doing the same thing, how is it a hedge anymore? So that's an interesting kind of like we're talking out of both sides of our mouths, or the folks that are bringing that up.
Yeah, and I think, you know, uh, it really depends on your time horizon and also if you need the money. Because if you introduce those two things, like for instance, if you're using money that you need and you're investing that into the markets, whether it's stocks or Bitcoin or crypto, uh, you'll probably sell earlier than you should because you need the money.
Mm-hmm.
Well, in comparison, if you don't need the money, like if you're not trading the money, but if you're investing that money, then I'm sure your time horizon is much longer, right? So you don't have to be really concerned about the short-term time frame versus the long term.
Mm-hmm.
And personally, I think it's easier. It's probably better to invest for the long term. And to your point, it is a good hedge. Sure. Do you, you know, do you want to be holding something when something falls in value? No, not necessarily. But if you know that over years, right, over a longer time frame, that the value will go higher, then yeah, you should be okay holding something like Bitcoin or let's say gold or even stocks. Because on like 100-year chart, the Dow Jones, it's been going up on an annual basis. It gains about anywhere between 7 to 10% on average. So yes, you want to be in assets, but just going back to what I was, saying earlier, do you need the money, and two, what is your time horizon here? Because that really will change your strategy in terms of how you invest or how you trade your money into the markets.
Right.
I don't think it's easy to answer, but yeah, that's how I approach it really.
And low time preferences win. Um, yeah. Anyway, I'm looking at the Dow Jones on the screen here. 100-year historical chart. Yeah, so everybody can see it. Um, yeah, I think I agree. Did I just get hot? Am I like hotter now? My mic?
No, you're good.
I feel like it just like amped. I don't know what I did. Anyway, um, yeah, I think definitely for the long term, Bitcoin, I'm not too concerned about it. But it is interesting to see kind of that it is very correlated, and I think nobody ever thought it would be, but it's becoming more correlated, and I would think that will become even more apparent when we're getting more paper Bitcoins. I know there's not a whole lot of them in the United States right now, but I know that there are several crypto ETFs in Canada or Germany where they're starting to do kind of second layers of crypto, but like in the traditional system, it's like a second layer on Bitcoin, right? You have your
Right.
base asset, and then you have the funds or whatever that's representing that base asset. Um, Kind of like you had gold, and then you had a gold ETF, and the price went up, right? So I
Oh, just
think that'll definitely be a part of it too, but that also kind of dampens it too. So let's say 10 years from now, this is an impossible thing to actually answer, but let's have fun with it and maybe see if we can come up with something. Speculate, if nothing else. But like 10 years from now, you think Dow Jones will keep going up, stocks were still involved, no major changes to the traditional market as we know it, and Bitcoin will be kind of still tethered? Or do you ever think they'll divide out where people want more cryptos than they want, old, old, I want to call them old world, but traditional legacy stocks.
Yeah, like more traditional assets. I think, yeah, next 10 years, uh, I do think the stock market will be higher than today. It will follow the long-term trend, which is, the 7 to 10% annual gain per year. So I think that trend will follow. Um, with that said, of course, we're due for a heavy correction or a crash, given the market cycle in itself. So there's that component as well. But yeah, in the long term, 10 years or within 10 years, it's probably better to be in assets, stocks in this case, versus cash. You know,
Yes,
your
absolutely.
your purchasing power will be better off with assets, owning assets than owning cash. I think that's a fact, to be honest,
Yeah,
because of inflation, you know?
I
So
totally agree with that.
yeah, so you want to own assets, obviously crypto as well. And in terms of decoupling,
That's my main point. Will we ever see like if you're talking about, the $1 million Bitcoin? I mean, that's gigantic. I mean, so much of the world will be involved at that point for it to give us a price. In
correct.
other words, the market cap will be a lot larger. More people will be
Yeah,
having Bitcoin in some form, and like that's a significant like sentinel event if we're
it
going to
is.
reach those levels where I think at that point it's going to be its own entity.
I do agree. I do agree. And I think the market cap of crypto and, of course, Bitcoin, it has to get larger. I don't know. I can't say exactly when it will decouple. It's hard to say because, if you think about gold, or I mean, we're talking about correlation here.
Mm-hmm.
If you think about gold and the stock market, they're both correlated.
They are.
If the stock market drops, the gold market will drop too. The gold ETFs, everything will just drop altogether, hand in hand. And the opposite is true. If it goes up, then the price of gold goes up, and that's also been true with Bitcoin. So when will it decouple? I'm not sure. Is it the $1 million mark? Possibly it could be because it might be very stable at that price point.
Yeah.
Um, and to your point, Bitcoin will be much bigger than it is then compared to today. So yeah, I'm just not sure. I've Earlier on when I was researching Bitcoin, I thought it already had decouple, but that's not true. I think it's very correlated to the stock market, like almost to a 1-to-1 ratio.
It seems to be. And as the music
Anything about
continues to play, I think maybe that's a big thing too to talk about the money. As long as the money is still, I mean, it's obviously very unsound compared to what money was at one point in time, and I think we both agree with that. And just like the sheer volume of inflation is just crazy and has been on crazy trajectories for a while, and now it's just getting even crazier. Um, but the monetary system generally is still functioning. The fiat standard is still in place. That's still what we're using. And so everything hasn't really, it's business as usual, right? But if
yeah,
that would be significantly um, challenged, if it fell apart, breakdown, I mean, even the catastrophe, you have a dollar crisis and, the US dollar is dethroned. And I'm not even saying by Bitcoin, although some people might argue that. I mean, you're looking at El Salvador now and some other South American nations that are starting to adopt it. And they, by the way, never had their own currency, as far as I know. They were always using US dollars or someone else's money. That's actually very similar. I know I'm rabbit trailing a little bit, but even, we had some central banks in this country, but we didn't always mint our own coins in the United States. Like there was a global gold standard and we used Spanish coins or French coins or whatever. As long as an ounce was an ounce, nobody cared. So that was actually what was liquid and circulating in the American republics, before we were minting everything and had our US dollar, right? So that's kind of like in Argentina now. Sorry, not Argentina, El Salvador, um, where they're actually using other people's money and they've now chosen to use Bitcoin. But anyway, I think if there was a major issue with the US dollar, which might be to do with inflation, while they've done a pretty good job controlling it. And by the way, I don't wish for the dollar to implode. Like, I think sometimes I talk about it a lot, and people might think I'm rooting for it. Like, I'm really not. Like, it's our money, and like it'll really shake up the entire planet. Like, whether or not there's a better, brighter frontier afterwards, we don't know. I would hope so. But I mean, humans have been pretty resilient through history, But at the same time, like to screw with the money is major. But I do agree, on the other hand, that there is a lot better money out there and better principles for money to function on, and that would be more along the lines of, Bitcoin, or like as the new gold standard, as Saifuddin would suggest.
yeah, yeah. I just think it really starts from education, right? Many people, they don't even know who the Federal Reserve is
No.
and what they do. But if they question that entity and question what they do, I think that will lead them down to the rabbit hole. and see why you want to really protect or increase your purchasing power at the end of the day.
Yeah.
And that's what it comes down to. For me, I don't think it's necessarily making a lot of money. Sure, it's great, and of course it's great to have money than not have it, but it's protecting your purchasing power, because due to inflation, it's decreasing every year, the money that you have in your bank account. So yeah, I'm a strong proponent of that. Starting with financial education, and then it should lead you down the road to taking some action steps of how to increase your wealth, your net worth. And that's really what, fundamentally we're getting at as we talk about crypto and the markets here.
Right. I do think we have a big problem with financial literacy, understanding anything about economic policy. And by the way, not all of it is even able to be understood necessarily, because like the Federal Reserve, well, it has a public facing chairman and a board of governors and multiple sites around the country. We don't really know what's going on inside. And they pushed for auditing the Fed for years, and they've never successfully done it. They had a partial audit, I think, in 2008. And that's when they realized like the Fed was giving money to all these banks in like Germany and all over the world. and so like we don't really know. So like some of it's actually unknowable, but I think the principles of economics are knowable, and that's where it would help us and, let's say, kids in school, whatever, like future generations, those younger than us, those older than us, to be aware of that. And I think cryptos might be helping that too, because
Yes.
I think we're talking about like, even though, and I mentioned this yesterday in the newsletter, but like even though I think we kind of lost, at least like when I knew about Bitcoin, I was in my 20s, Ron Paul campaign, libertarianism, which I still agree with him and those principles. But I think there was a lot of like, this is the new way, and we're just going to all be using Bitcoin tomorrow. Like, I don't necessarily see that happening, although I think it could. I'm not saying it can't, but I'm not as like accelerationist, I guess. Like, we're just going to do this tomorrow and the world's going to be different. Like, it takes time, right? And there's a lot of moving parts and everything. But I think even though maybe today we're not using Bitcoin and Litecoin or Monero as money, if you study them, you realize they were designed a certain way. And their design reveals to you the economics of Satoshi Nakamoto, what he decided to model their coins after. You have a limited supply, so it's non-inflationary, right? It's also private, which is fascinating. It takes work, so nobody gets a free ride anywhere. Like, there is no free money. You don't just hit the printing presses. There's none of that, right? So even the miners have to go through a process of investment and capital to actually get the Bitcoin. So it's actually very moral money, because there's like sweat and effort at every level. Nobody just gets a free pass and gets to spend that before it trickles out and raises prices. So I think it's a very highly integrous, these coins, Bitcoin, Litecoin, not all of them. And I think we'd agree on that too. There's a bunch of cryptos that aren't designed to be money at all, and they're never going to be money. And that's okay. I don't think money's very exciting, but I do think Bitcoin was invented to be a money, right? And Litecoin to be a money, and some of the privacy coins to be a money. And they bring different things to the table, but it's not that complicated. It doesn't have to be that complicated.
Yeah, look, I think what you want, at least in terms of Monero and the privacy coins, those coins have a very strong use case, which is privacy. Mm-hmm. And this may, sound controversial, but something like XRP, right, which is hated amongst the Bitcoin maximalists. And I wasn't a fan of it early on either, like back in 2017. But I've come to realize the use case for them, which is very strong, is overseas remittance. Now, I don't know, if you ever had to send money overseas, but it's very expensive. You're paying anywhere between, let's say, 10 to 15% just to send, let's say, $100, right? The recipient only gets $85 or $80 sometimes.
Right.
And that's a huge chunk in fees. Well, Ripple, the company, XRP is the coin, Ripple is the company, they do that for free, and it's instantaneous. It's settled within 3 to 5 seconds. And I know this because I tried this myself. I bought the coin and I transferred it to my wallets, and it's fast. Unlike Bitcoin, where it takes 10 minutes for every block for a confirmation. So it's a different experience. But I bring this up because it's a strong use case. They're solving a problem here. XRP, Ripple, they're going after remittance, and that's a gigantic market. I don't know the total market size of it, addressable size, but it's a big market. And that makes me think of how Amazon first started too. If you think about Amazon in the early days, what they sold were books online. If you can think back to like the late 90s, early 2000s, we had bookstores. There were Barnes and Nobles and Borders and others where you physically had to go to the store to buy a book. But Amazon was a game changer because Amazon allowed you to buy books online for like the first time ever on the internet.
Yep.
And so once they really solved that, then they expanded to other products. And come today, we can't, we don't live without Amazon, really. We were anything and everything on Amazon. But same thing with XRP. I think it's actually brilliant that they're going after remittance because it's such a big problem. And they understand that they probably have the best solution to remittance. And then they'll probably expand to other products, which means that in its nascent moment in time, right now, XRP is about 58 cents, 60 cents. I think there is much value to be created. And of course, none of this is financial advice, but it's a different approach, to Bitcoin, where of course I'm in the same boat as you, Kyle, where I do think Bitcoin is sound money, the hardest money ever to be created digitally too, with a hard cap of 21 million. But look, am I a Bitcoin maximalist? No.
They wouldn't be very pleased with this discussion of XRP, but they wouldn't be pleased with Litecoin either, which blows my mind. Don't get me.
Yeah. And going back to purchasing power, all I'm doing here, I'm looking to protect it or increase in the purchasing power. And whether it's Bitcoin or XRP or Monero or whatever the other coin, Litecoin too, that gets me there, I'm all for it. Why not? As long as it's ethical, right? And none of these are like sin stocks by any means. So that's how I think of it. And sure, right now XRP is going through a lawsuit with the SEC.
Right.
But
where do you think that's gonna go?
It seems like they're winning little by little. It seems like they're doing good work out there, defending themselves, saying that XRP isn't and should not be a security, just like Bitcoin and Ethereum, how they're labeled not a security as well. So we'll see how that really plays out. But I feel like they will probably win in the end.
Yeah. Well, that is to be determined, but I will support you in your desire to see them succeed. And I would imagine even like I used to have XRP, and it did wonderful things a few years ago. I got out of it after I realized of the suit, because that personally just made me very uncomfortable. But I do know that they have a lot of resources, and I think I wouldn't be surprised if they recovered from this. And that might actually be a very good thing, because that might be some precedent for other projects to stand on top of in the future that are legitimate but might come under fire.
You want to own. With that said, you want to own like the strongest, the best quality coins, at least crypto. We're talking about crypto here. Right. Too, at the end of the day, I think that probably more than 95% of these new projects or new coins that come onto the market, they're gonna fail. And you can just go to like CoinGecko or CoinMarketCap. Just look at the market, the top 10, top 25, even 2-3 years ago. It's very different from the top 10 today. But Bitcoin and Ethereum, they've been, and XRP too, they've been there probably for quite a bit in the top 10, but the others not really. A lot of them have failed. Some to few are scams, so stay away from that. Do your due diligence, do your own research, and if it's too good, if it sounds too good to be true, then stay away. You're probably better off staying away. Like something like BitConnect, that was just a huge scam when everything unfolded, unfortunately. So yeah, you want to, I mean, I think I talked about this in my last newsletter, like portfolio allocation.
Mm-hmm.
You want to own the stronger coins, the strongest coins in your portfolio.
Right. I'm looking for something here. There was actually an image I saw the other day which showed the top cryptos. Here it is. Pulling it up on my screen. So like if we look here, cryptocurrency by market cap, this is from 2013. And we have Bitcoin number one. The price then was $115.11. The market cap at that time was 1.2 billion, it looks like. So it was a lot smaller then. Litecoin was number two. Then we got, listen to the other list, the other ones on the list. Number three, PP Coin. 4, Namecoin. 5, Devcoin. 6, Terracoin. Novacoin. Freecoin. Feathercoin. CHN Coin. Mincoin. Lexcoin. Barbecue Coin. Bitbar. And Bytecoin. And it's funny because if you're looking at this now, I don't know the exact day or month. I just know it was 2013. I shared this the other day. I said, what do you see about this chart? And somebody said, Minecoin is pumping, which it was, right? It's 10.65% up on that 24-hour chart. But where is it now? It doesn't have a live price. You don't even know where it's ranked. There's no more, there actually is still an entry in CoinMarketCap for that, but it's nowhere to be found. I know Namecoin had a lot of promise a few years ago. I think they were trying to solve DNS and like ICANN stuff for like a decentralized internet database for names. So again, I don't think they were a scam. I think they had good ideas. They had, they had a purpose, and it wasn't some scheme. I think they were sincere in what they were trying to do. But number 4 in 2013, and they're number 604 as of 2 days ago when I checked. So even regardless of how noble your team or your project might be, it's hard to succeed, right? It's just because you have an idea doesn't mean it's going to actually make it. It's not going to be an Amazon necessarily, right? Some will, but that's another thing too, where it's like, even if you have the best intention coin that's not trying to scam you, that's not a BitConnect, that's doing a great job, it's still a really rough road up to really succeed. And my main point is, was, what are the two I see here after all these years? Bitcoin number 1, Litecoin number 2. Now Litecoin fell out. It's in, if you don't count stable coins, it's still in the top 10. But with the stable coins, I think it's like 13 or something right now. But, that staying power, we're looking at, coming in October, it'll be 10 years. So that's why I really like to see that, because it's like, it's already proven itself and I don't see it going away. So, but with that being said, let's move on if we could and talk about inflation. So I recently read this week that I think it was a New York Post article. I have it here from my website, and I have a little section on it, inflation on the rise. It says, we discussed in a previous issue how the Fed stated year-over-year inflation is declared to be 2%. I know you'd be familiar with that number, DHL. But now it's admitted to be 5.4%, right? To me, that still seems like a joke. I mean, I just think it's much, much higher than that. But it's significant because it's actually admitted. Like, they finally tweaked it up a little bit. Like, we're leaking a little bit more. And it's, by the way, that's more than doubled. Doubling 2% would be 4. Now we're at 5.4. It's actually more than double, they're admitting. But I still think it's quite a lowball thing. And I say that, and correct me if I'm wrong, because I could be, but I don't think I am. if you look at the St. Louis Fed and you look at their money supply charts, M1, M2, M3 is no longer published, it's a hockey stick. And that's the actual quantity of money held in accounts and in existence now. And over the past year, and this was before even the current administration, it started with Trump and COVID. So red and blue, they keep the presses running. I always make that clear too, because some people like to politicize. Oh, it's this team or that team. I'm like, no, it's both teams. Now, some can be more friendlier to economics that I might agree with, but at the end of the day, they're both involved with the monetary policy and just runaway inflation. Hasn't arrived at runaway yet, but this chart is terrifying, and I imagine you've seen that hockey stick.
I have seen it, and I think it is hilarious how they got rid of M3.
Yes.
They just want to keep everyone in the dark, and they want to kick the can further down the road, prevent any correction or crash from happening. And they have their own reason for that, obviously. But going back to inflation, the CPI, I think it was like 5.4 or 5.3, something like that.
That's what they admitted, yeah.
And I do think that is a joke too, and they are well understating true inflation. There's another website that I like to follow. It's called Shadow Stats.
Oh yes, indeed, I have that chart right here.
It's an alternative to the CPI, to the figure. And I believe they stated that real or true inflation is above 13%.
Yes. Now
that's double the 5% that the CPI, that the Federal Reserve thinks inflation should be or is at. So that makes me, and you know what? How can you see that in real life? Simply through food. If you've been going to restaurants, you've probably noticed prices are just much higher than maybe even a year or even 2 years ago, and that's because of the inflation rate. Normal inflation, so it's stated, it's between 2 to 3% annually, but COVID obviously was a black swan. Trillions got printed from the Fed, free printing, and that inflated our money. So I'm more on the side that Shadow Stats, that 13% figure, is probably more real. It's a better measurement than the CPI.
Yeah.
And really inflation, it's subjective, right? It's different for everyone. Someone who is making, let's say, less than 50,000 compared to someone who's making more than 50,000, they're gonna experience it very differently. The more money you make, the more inflation you can really absorb, but the less money you make, inflation really hurts you because it takes a lot of dollars to get the same amount of good and services. So look, for me, that makes me think I need to own assets even more so to protect my purchasing power, going back to that, as we spoke about that in the first half.
Yeah.
So
Go ahead.
It's not, by no means is inflation a good thing. And it's looking very unhealthy so far.
I would agree it's extremely unhealthy. And I want to point out about the Shadow Stats too is I made a point to say it's not like this is somebody coming up with some scheme to like, oh, this is this real set of numbers and this is what the government says. Shadow Stats is actually telling you the 3 standards that was actually set by the government in different decades, which I think is so hilarious. So if you use the 1980 CPI, it's this. If you use the 1990 CPI, it's this. Or if you use the current one. And of course, like you said, kicking the can down the road, we don't want to reveal reality. But all of those are actually technical government metrics, the official data, So they keep moving the goalposts, which is another problem. And that's part of what fiat is. Because as we mentioned a few years ago in the Fullerton coffee shop, there's all these currency units and nobody knows the definition of the dollar. It's undefinable now. So the fiat system, it's really a definitionless system of constantly moving goalposts. And that's just not, it's definitely high time preference, live in the now, live in the today, and don't worry about tomorrow. And I think traditionally that's the exact opposite of what our grandparents would have thought or what our civilization was built upon, for that matter. But just to read it here. So if we look at the 1980 based in 2021, it was about, yep, you were right on 13%. If we use the 1990 variety, we're at 9%. And then today we're at 4.5. So, and that's, I think, generally, and something that I mentioned too, is that inflation does. So the market system is still at work to a degree. I know we're not a purely free market. It's not laissez-faire anymore. Um, that's kind of became a curse word 100 years ago, the progressive era. But like there is an aspect of the functions of a free market. Like some goods and services are getting cheaper despite inflation. Like my cell phone is way better and cheaper than it would have been 15 years ago. So the market system's working in that technology sector where there is competition and all that great stuff that delivers prosperity and lower prices at the same time.
Yeah, let me. And there's a chart that makes me think of a chart where, like you were saying, electronics, smartphones, TVs, maybe even cars to some degree, they're basically getting cheaper. And what I'm getting at is that makes us or Americans consume even more, and which means less savings, which means less to zero assets, and it's really killing your purchasing power. Because it's making you want things, and you were talking about instant gratification. Yeah, our parents' generation, they probably delayed gratification, if anything, saved up money to buy a house rather than renting for the rest of their lives, as an example. But come today with like social media, especially Instagram, you want that next thing, that next new thing, and it's twisted if you think about it, because some will use probably go into debt because of that, and that's probably not the best choice either. But yeah, it's abnormal. That's what I'm getting at. It's not. I think it's normal to save. I think it's more normal to even have assets, but not to have those things, and not, which really limits your options. I don't know. It just makes you question things a little bit more.
Yeah. Yeah, I agree with you. And I think our grandparents, especially, they lived through a pretty hard time and came out of it, and they had a really strong society for a number of years. And that was even in the era of the Fed, like, and World War II. And there was definitely a lot of political and social distortion at that time. And they still did a good job despite it, I guess. But, the inflation, there's a lot of things we could discuss, but I think even the Fed's not operating the way it operated when it was born. If they would have told the people in 1913 or 1912, because they had to have a campaign before it was passed, right, 1913, and most people were very against it. If they would have said, if they would have showed them today's Fed, I think it would have given everyone a nightmare and said, you can't live that way. So the Fed in the early days was very conservative. And why was that? Is because the US dollar was still defined by gold, and the people still used gold, right? So that didn't change even though the Fed was born, right? But slowly and surely you get used to those paper dollars. It's more convenient. We don't have to carry this gold. We don't have to store this gold. They'll do it for me. And then 1933, they closed the gold window for you and I, right? The American people. Although if you read the definition on the back of that executive order, actually there were some carve-outs you could have maybe gotten away with, but that's no longer matters. History is history, right? And most people gave up their gold, and it was penalized as hoarding by FDR. But even with that, and as criminal and terrible as that was, because I do consider it to be a form of robbery of the people by government, despite their campaign of why they felt they needed to do that, because there's always a campaign, right? And they shapeshift over the decades. But at that time, they had a campaign and said, people shouldn't be owning gold anymore, when that was really the people's money. But anyway,
Yeah, just one thing.
Go ahead.
I'm asking about maybe inflation. I'll say is that, if we know that the real or true inflation rate is 13%, that just means your earning or your wage should match inflation. So
Yeah, it
you
doesn't.
should be making 13% more
Yeah.
this year just to keep up with inflation. I know, some places or some companies, they give you a merit increase of 2 to 3%.
Hmm.
Well, let's just say they give you 3%. 13 minus 3, that's still 10%, where inflation is outpacing your purchasing power.
Right.
So you kind of have to figure out a way where you either make more money, or maybe buy assets or own assets and get like a yield of some sort
Yeah.
and make that and offset it. So that's really the action step here, with inflation.
That incentivizes us to do all sorts of things. I agree with you, and I think that can be very dangerous, in fact, and that's another fact of unsound money is you have to take more risks to stay ahead, rather than just keeping your gold coin, like I said, which was once money among the people, under your mattress, and it's always going to be good as gold. Um, so it's a real moral thing, money. And just to close off, maybe what I was saying previously is, you had gold, even though the Fed demonetized gold for you and I or the people, the government still had to use it. So that still kept the Fed in line. There was inflation in the 30s, but it was much more restricted than it is today, because there was still that gold dollar tether. It was $1 was 20. Sorry, 1 ounce of gold was $20, right? And then after the gold was taken, it was $1 was $35, right? And the government basically could create the difference out of a dictate, and they used it to finance their programs and things like that. But other than that, they couldn't just make it up. They couldn't just print at will, right? So that's what I'm saying. Even though the Fed was born and it's been here since 1913, it couldn't do what it is able to do today because gold held it down, right? But in Bretton Woods in the early 70s, when everything was cut off from gold, all fiats are now on a global floating standard. That's why we have this new uncharted territory of inflation forever, QE forever, and
Yeah.
I think that's very dangerous. So, I'm not saying the world's ending tomorrow, but like you said, we have to get creative now.
Yeah, I mean,
And how do
yeah,
we
I mean, look,
preserve our wealth in this environment when they keep creating new currency units?
you can't, realistically speaking, you can't really fight the Fed.
No,
And,
I would agree with you.
but what we can do, you and I included, is we can understand how the game is played and
Absolutely.
play it well. And well means making money, right? Making money in terms of protecting our purchasing power.
Hmm.
So I think that's what's important here,
Right.
rather than trying to say, end the Fed. Sure, of course, no one, we don't like the Fed because they
Yeah.
control the money supply, but
Right.
realistically, they're not going to go away.
I,
uh,
I don't think we're going to cause them to go away. Like I said, even Congress couldn't really pry much open there. I think the game will eventually stop because of economic reality.
sure.
And that's what we could learn from that. Like the British Empire was an empire, but they dialed it back, and it wasn't that bad for them. Some pains and things, but they dialed it back voluntarily, and they didn't explode, right? So the U.S. could do something similar, and not overextend itself in the monetary space or even the global space. I know we're not talking about all that stuff, talking about crypto, but it's all related, though, isn't it? Though, like you can't really
Everything's
separate one
connected.
from the other, and
Yeah.
and I would agree. The inflation, like you said, it does hurt. Because I think even if you want to bring in world religions or Christianity, like money is talked about a lot. Like what is like
Yeah.
moral money? And I
Even the
know,
Bible, yeah, it
yeah,
is.
it talks about it more, honest weights and measures. I believe in the New Testament writings, Jesus was talking more about money than heaven, hell, and all these other things we typically hear in our sermons on Sunday. Yet we don't hear a lot about that economic reality, even in our church services or religious environments. It's very rare, yet it's so important and it affects everyone. And
Yeah.
like I would agree, the more privileged folks in society with tons of money don't feel it as much. If anything, they might be connected, or their business might be connected to a primary dealer bank. So they're the ones that are actually going to get the newly minted money first. They
Mhm.
spend it before prices rise. And then, like we said earlier, the poorest of the poor shopping at Walmart or wherever, they're spending higher prices at the end of the day because by the time that new money trickled out, prices have uniformly risen. And that's another thing too. Whoever gets the new money first buys at today's prices. But whoever is really late in the line, which is typically the poorer folks, they have to swim in high prices, and some cannot. Now you're even seeing people, and I'm not for price controls, but in this environment, you can understand the appetite for it because people can't even afford to pay rent in some cities.
Exactly.
And I don't think
Yeah.
that's because rent is too high arbitrarily. It's because there's so many currency units, and it's complicated. Because again, there's some of it has to do with policy and inflation and the monetary system generally. Others has to do with the market drives and appetites and uniquenesses, right? Like I don't think houses are going up just because people don't want them. Like people want them. There's bidding, so that's going to raise prices too. But there's also how do I preserve the value of my money so I'm going to get into something now, which also, you see what I mean? So it's very complicated. Human action is unlimited. But more the morality of money. What about retirees? How does it affect them?
That I'm not too sure.
Fixed income. You get your
Yeah,
check for whatever a month, and as the prices rise, are you getting more or less for that money? So they're being stealthily taxed too,
of course. Of
stealthily
course.
robbed of what they're able to purchase. So that's why I think this is pretty serious, and I think it's very important for, like you say, us to be really educated about what does an what does the fiat standard really look like for common people, right?
Yeah,
And it's
yeah,
across the board too, because inflation does go from high to low, right? So it's like Jeff Bezos is going to have to deal with it too. I mean, I think he has a different network to navigate it than probably I or you would have. Uh, but it does affect everyone. But the sooner you get the new money, the better, and the less painful it is. And that's not the advantage of most.
yeah, absolutely.
So cryptos, is it a better way? DHL. I got to temper down so I don't start ranting.
Yeah, I think the millennials and younger generations, we are understanding how money works
Yeah.
uh, on a wider scale compared to previous generations. So I think, the trend has changed.
Case for
And
optimism.
yeah, and
I like that. We got to
possibly
stay
that's why,
optimistic. We must stay
something like
optimistic.
cryptos are more well accepted, given it's very risky, of course, but they understand that, why would I keep my money in fiat versus, let's say, Bitcoin, where the value, it is a store of value too. So, people get that. I think younger people understand that.
Right.
I remember seeing a poll like, if you had the choice between to whether whether to buy Bitcoin or gold, which one would you buy? And the younger generations obviously pick Bitcoin over gold,
Right.
whereas the older generations, people who are aged, let's say, above 45, 50, they chose gold. So it's a change in mindset. It's a change in perception too. And I would think, trying to be optimistic than pessimistic. I think we have a bright future
I think
ahead.
that's very important. And I try to stay the same in terms of the view. Because this stuff can really make your blood boil at times.
Yeah.
But I do, and I'm not saying that's wrong. I think that's a natural response to that sort of thing.
Oh yeah.
But I think the solution is economic literacy, so we could actually, in the spheres where we are effective, spread those ideas and get things done. Because you can join your city government. I mean, Texas, I mentioned, it's becoming Bitcoin country. Like, if there was no appetite for that here, it wouldn't happen. So that had to have been a local appetite to get people to get bills in that were actually signed. Like the governor's not just going to like create a bill tomorrow and sign it. Like there's a whole long process to actually have achieved what has happened recently, right? With the
Yeah.
environment. So we definitely still have an impact, and I don't want to personally believe that our actions are inconsequential because I truly believe we all have more consequence than we might think. And I think it's important to keep that in our minds. But so we can influence change. Whether we're going to audit the Fed tomorrow, try, advocate. But I would agree with you. Some things are pretty big. But we can influence in our local environments. Our localism, or wherever your feet are planted. Just try to spread the news and stuff there. Right.
Yeah.
I want to give you the microphone to talk about, and we can maybe end on this. We've been going pretty long, 56 minutes. This is terrific. John, where are you?
Yeah, it's been an hour.
But I've got on the screen the wonderful article from How to Survive the Bitcoin Bear Market Complete 101 Guide by Mr. Whale. 7 hours ago published. Today is 7/17/21. Did you want to point anything out about that article? Or what impacted you about that? Just what do we do in this kind of down environment?
Yeah, I mean, I follow this guy. His Twitter handle is Crypto Whale, if you're interested in following him too. And it's a very elaborate article of how to of what to do in a bear market. He goes through the denial stage, covering emotions too, of being a trader or investor. But I think what impacted me the most is it's just a realistic view. Like if you only listen to they're called moon boys, right? Where they think that Bitcoin is just going to go to the moon, go to like 100,000 and a million. He takes a neutral stance or neutral perspective, and he really shows you proof for the most part, like facts of why he thinks Bitcoin is now in a bear market compared to a bull market. So, he's basically he's saying just be prepared for it as best as you can. And for me personally, I mean I have the same stance. Am I a buyer today? Not necessarily. Probably more of a seller to take profits. But yeah, it's a good read. It's a good read. It's really long. It's probably like 10. It's a 10-minute read or so.
Yeah.
But I liked it.
I have the grayscale chart up. It's saying here, institutional demand. It has like kind of the curve, and then it says no new institutional demand equals bearish for Bitcoin. So, do you think there's less institutional demand right now? Is that what you're seeing, or?
I think so, yeah. When I've seen charts from like Glassnode to CryptoQuant is another one, like on Twitter, people posting it. I mean, and Crypto World too, there's been less demand. And touching upon Tether, they stopped printing, I think, for more than 50 days now. And Tether is kind of like the Fed, right? Mm-hmm. They say that they've been audited, but clearly they don't have the reserves in place to back up their Tether on a 1-to-1 ratio. So they stopped printing, which means that there's no new money or inflow going into Bitcoin, which means the price isn't going to go higher. And look what happened. Come today, it's fallen from the 65K high all the way down to 30K. So yeah, I think, you just gotta have a realistic approach, really.
Mm-hmm. Yeah, and I think there's still a lot to be done, even in this time. Like I was saying to folks, to like, hey, check out a wallet that you haven't tried before. Get your tax stuff in order. Download an app that you may not have tried before in the space. Like there's lots of cool rewards apps now that you can, swipe, like Pay, which you told me about actually. So give kudos to DHL. You can, swipe your card and you'll still get your rewards points from your credit card company. But on top of that, as another layer, you'll actually get credits towards Bitcoin, which is actually pretty cool. So, we can sign up for things like these now. I mean, I think if you're able to buy when it's lower, or buy the fear index and sell the greed index, it's usually the way you want to do it if you're going to trade and not just hold. So now's the time where probably, while it might go lower, you're still getting it a lot less than 64,000. And I think in the future that might be challenging.
Yeah, exactly.
So there's still a lot to do, even though things are, either, like we said earlier, terrifying for some, or just plain boring. There's
Yeah,
still stuff that we can do.
uh, I've also heard, of Bitcoin kind of being like digital Manhattan, like Manhattan, New York real estate.
Yes.
And just, think about if you owned a piece of property, let's say even like 30 years back, and you still own it today. I mean, think, the appreciation, and on top of that, the rents that you can collect. Your purchasing power is much higher than the average person.
Mm-hmm.
So, same thing with Bitcoin. If you believe that this is the future, then you probably want to own a piece of digital gold, and it could be life changing, right? No
Digital real
guarantee.
estate. Yeah. I've heard
Yeah,
that
but
analogy too. And I think, and that would be really fascinating to see that materialize in time. And I know you've read Saifedean's book, The Bitcoin Standard, and I know things are going to get really scarce for Bitcoin in the next decade. Like, unbelievably so. Like,
yeah,
I don't think I totally understand it, to be honest. Like, I can read it, but I think the reality of that, plus more demand coming, it's going to be wild.
yeah,
Um, but
sure.
there's, but with that narrative of this being the property in Manhattan or whatever, and you bought it in 1900 and you still own it today and you just rent it to everybody who wants to use it for their coffee
It,
shop, their apartment
yeah.
complex, or whatever, will we be like lending against our Bitcoin, or, you know, taking, how would we put this in language? Like
Well, yeah. I
leaning
mean,
against it, basically?
yeah. There's companies today. I personally use a company called Celsius Network. There's
Right?
another one. There's another competitor to that called BlockFi, where it's crypto interest lending, right? So you stake your crypto, and then they pay you out an interest, usually in kind. So meaning
Right.
if you, let's say you put in one Bitcoin, and they'll give you like, let's say, a 5% APY interest on it,
Mm-hmm.
and so you get paid on a weekly basis in Bitcoin. So it's already happening. Um, yeah, and it's probably going to grow much bigger, that industry. So just like, the way I like to think about it, it's kind of like monopoly, right? Like you want to own the most properties, one,
Mm-hmm.
and two, probably the most expensive ones, two, and you want to have hotels on them, right? So you can collect the most rent, like on Broadway, and I think Park Place is the other one. And so that, to me, that's what really, it's a good comparison in terms of owning Bitcoin or digital real estate, in this example. So yeah, I think that's where we're headed. That's the future trend. Everything's becoming digitized.
Yeah.
It's the
Yeah.
digital economy. We're moving away from the analog, so to speak.
Yeah, we're moving away from the monopoly money system
That too.
of paper dollars. And again, it's not just, Federal Reserve notes. It's, all the world currencies. But the funny thing is, if you look at monopoly, uh, the rules actually say the bank never runs out of money. Like that's an
You
actual
don't. You
fact
don't.
if you play the game, that the bank never runs out of money, and if you literally run out, you can start issuing new units. So the beautiful thing is you'll never be able to issue new units. Sorry, Mr. Schiff.
I mean,
Um,
hence the
with
printing press. But
forks
yeah,
and things of Bitcoin. But you'll never issue new units of Bitcoin, Litecoin, Monero, um, and other coins. I was almost going to go and bring up Orchid. Why don't we just talk about it? Because I know you weren't on last time. I know you really like Orchid. Just share with us a few minutes about Orchid.
yeah. I mean, it's not a blockchain by any means. It just uses crypto. So what it is, it's a VPN. I'm sure you guys don't know what a VPN is, but it's built on top of the Ethereum blockchain. So I believe it's an ERC20 coin.
Mm-hmm.
And yeah, I'd say they're the first movers using crypto with VPN. And the use case is privacy, just like you would use a VPN to hide your identity, right? When you're online, when you're on the internet. So same thing, but they have a strong team. And their CEO, he used to work at Pantera Capital, and I believe they're a seed investor too. And the product is good. Yeah, I mean, I've used it. It works well,
Yeah.
and I think fundamentally, privacy is going to become more prominent and probably more valuable in the future. And Orchid is a good coin to, I think, to have.
Yeah.
But
I
yeah,
I think thank you for sharing that because I know we've discussed it before. I know even just generally speaking, like privacy, and we're not even talking about, and there's debate on how private you are in terms of let's say national governments or whatever, because they're powerful entities and stuff, and but my thing is, despite that, what if you're not at an airport? What if you're sending sensitive? The point is, it is private, but it's also encrypted. So like, if you're using public hotspots, why I use a VPN or have my wife use a VPN is like at airports. You're traveling, you're in another country. That tunnel will actually keep your data private, so it's not going to be swiped out. Also, like even something more practical would be like, let's say I'm in another country and I need to access my, Citibank or Bank of America, whatever bank you're using in this country. And it could have issues if you're in a foreign VPN, or sorry, a foreign IP address. Maybe you don't have access to it appropriately. Just fire up your LA or your New York VPN address, and you're usually pretty good. I know that they can detect those because their security can monitor if you're using a VPN or not, but typically it works fine. And then of course there's always the people that want VPNs so they can watch Korean Netflix in the United States. So there's all sorts of use cases between privacy, practicality, and again, not just like privacy from, like I said, the ultimate powers that be, but literally private privacy from the bad actor who's next to you in the airport that you might not know. Like I think to be honest, that's the more compelling case to me because I don't really care what I'm doing on the internet, and most of this stuff is HTTPS anyway, which is like a closed circuit, right? But the point your data is your data, and um, I mean, I think encrypted mail is good, right? So I think I'm a big fan of VPN. So I think that's a neat project. Not a money, but a neat project in the crypto space.
yeah. Well, we'll end it there. Yeah, we'll end
We'll
it
end it
there.
there. Ah, very good. Well, it's good, John. Again, we miss you, but thanks for coming on, David. It is always a pleasure to talk with you, and I miss seeing you. Enjoy your
Likewise.
evening tonight, and I hope to see you soon.
All right, Kyle. Good one. It was a good one.
All right, man. See ya.
See ya.
Cheers.